Friday, April 11th, market analysis, Stan Ehrlich. Very sorry, it's 2:30 almost California time. I usually make my recordings around 10 o'clock. I had a prior obligation, but I'm still getting it done. Thank goodness it's Friday. No real rush. Now, we had on Wednesday a test of support in oversold conditions and a bullish engulfing for almost every single index. Thursday, the market dribbled back down, and I mentioned yesterday to approximately the middle of the range of the Wednesday reversal, the green bar. The date was April 9th, and that is normal for me. I actually have a strategy ER3 from the ER signal in general that buys on a retracement, which would have panned out very nicely yesterday. So today the market closes higher, not by a lot. Well, actually, you go back a couple of months and 9 points higher today would have been quite a bit, but not given the volatility we've had here since March. So yeah, 9 points is quite a bit, but lately it's just a good strong day. This is the second highest close since the market bottomed out at the end of last week and this week. So I like what I see. I'm still calling for the same rally I did yesterday. At minimum, we're going to be testing 55.50-ish again. And I do think it's quite plausible that we're going to be going back up a little bit above 58. Specifically, 58.33 comes to mind. So the E-mini seems to be on its way up, in my opinion. We'll see what happens. Next, the 1 minute chart on the E-mini, you can see that later in the day toward the close, we had some strength making minor new highs, not particularly aggressively, not particularly, flamboyantly. So I'm sure the market's still telling me it's concerned about unexpected commentaries. Next, Spider. Higher close, of course, like the E-mini, testing resistance slightly. I am looking for a minimum of another test of 550, and I think there's a good chance we could get up to 575. But for all of these indexes, I do not trust these rallies. I do not really want to go long, despite the fact that I got bullish signals. I can't refute that. And we had no particular buy signal on the SPY, just got very oversold. All of the other indexes, QQQ on Monday, all the others except for the Spider on Wednesday, bullish engulfings, green bars. So here's the 1 minute chart on the Spider. Later in the day, started to make a little bit of a new high toward 11 o'clock. I like what I see. I don't have anything bad to say, except I don't trust this rally. QQQ had that bullish engulfing at the bottom day, April 7th. That's why I developed this strategy. It picks tops and bottoms frequently, or is giving you buy or sell signals sometimes a little prematurely. Not to say they didn't make any money. They very well could have, but it's not as flashy as picking the low day for months prior and for maybe months afterwards. But that's what this does. So I'm looking for a little bit more strength. But again, my half a century plus of experience tells me don't trust this thing yet. Next, we got the 1 minute chart on the QQQ. Next, we got the NASDAQ buy signal on Wednesday, a whopper. I just need to start closing above the high of Wednesday, which we almost, well, we haven't done it. We got close to it yesterday, and then it pulled back, and then it came back up a little bit more today. A nice 338. Now, I'm expecting a test again of 19,404 minimum, and very plausibly 2540, let's say 2537, too accurate. All right. Next is a 1 minute chart of the NASDAQ. Slight new highs late in the day. Okay, the Russell, I'm sorry, the YM did have a buy signal on Wednesday. And we climbed somewhat today, decent amount, 646. Coming up to some resistance has stopped the rally on Wednesday and Thursday and so far today. But I do think we're going to get above that 41, 161-ish. And I think we have a very good chance of coming up to approximately, I don't know, 43,000. Yeah, that sounds about right. Okay, YM, 1 minute chart, new highs late in the day. Again, nothing particularly fantastic. We got interest rate futures. Well, I got the Russell. I saw a little off balance doing this so late in the day. The Russell had also a bullish engulfing ER buy signal on Wednesday, came up a little bit today. This index is tracking lower caps 2,000 stocks, and it doesn't quite behave the same as, of course, the YM, the Dow 30 industrials, and the S&P 500 and the NASDAQ, I think, is a 1,000 or 2,000. I'm not sure. I don't remember at the moment. Stocks. All right. Now bonds. Oh, darn it. Russell 1 minute chart. Uh, Barely looks like it maybe not made new highs at the end of the day, but it certainly tried. Bonds still oversold, starting to look a little bit decent here at 111.17 support from a couple of days ago, but it did close lower today. I think the downside momentum is waning, and maybe we'll see a little bit of a rally next week, but there's no signals. I've still got to look for lower levels, but I do appreciate the fact that it has been holding real close to these previous important bottoms, 110.12, and that was on January 14th. And that could get tested before this market popped back up again somewhat. But because it's oversold, at any time it could rally a little bit. But I really have to start to close above the high of this bearish engulfing, which has worked fabulously. And we had that on April 7th. Down the next day substantially, down the next day substantially, down the next day substantially, and again today, down. Hey, not bad. Bearish engulfing in the 10-year notes on April 7th. Down day, and we had one little up day on the notes. I'm not sure I understand why that happened. And then down again today for new lows. I am looking for modest lower levels on interest rate futures, but we're oversold in bonds and close to oversold in the notes. So I'm not pushing it, but a little bit lower than today's lows. Okay, we got a bullish engulfing on Wednesday in crude oil. Came down to the middle of the range and maybe a little bit more yesterday and came back up some today. I'm looking forward to a close above 63.34 and a move up to a minimum of 64.92. Let's call it 65 approximately. And that's a substantial resistance. So Frank and I should be moving this up. I can see that had been relocated when they changed contract months. These are continuation contracts. All right, good. Yeah, move up to a 64.95, and it could very well come back up to 72-ish. What do we got for heating oil? A bullish engulfing on Wednesday. What happened since Wednesday? Market came down to around the middle of the range and closed a little bit higher than that and started to come up a little bit today. I really need a close above the high of the reversal on Wednesday, which is 2.1340. Once we get that, if we get that close, and once we get the close, then they're probably going to move back up to the resistance area, 218 to 221-ish. And I'm not ruling out a rally all the way back up to 2.3. And we got a bullish engulfing on Wednesday also in the natural gas, which is not doing quite as well. And I can explain, I think, because the head and shoulder top formation is something that's, I think, going to dominate. The bullish engulfing we had on Wednesday could very well cause a short-term rally, but it's not at the moment. But the bullish engulfing is not canceled out because we haven't gotten below even one tick below the low of Wednesday's low. That would kill my signal. As long as it stays equal to or higher than the low of the signal day, which was Wednesday, the signal's okay. And sometimes I get aggressive and gutsy and buy it if it's within a tick or two of the low of a bullish engulfing ER buy signal because my stop is a few ticks away or super close. And when it works great. And when it doesn't, I've lost a few ticks. No big deal. So I like a rally, but I'm not sure I'm going to get it. The head and shoulder top is still working fine. The low on Wednesday was a new low for the move down. I have a minimum downside objective of a little under 3.000. Next chart. Gold. New highs. I thought so. New highs for the trend. Getting very close to overbought again. This is a strong bull market. We're doing the stair step climbing. Typical situation. You get in overbought conditions. Sometimes you're going to get a bearish engulfing. That one didn't work particularly well. It topped out sort of, backed up a little bit, not much, and then charged in the new high ground. Did the same thing basically in the last week or two. Bullish, not quite sure how much higher, but all of my minimum upside objectives have been fulfilled as a result of this pennant formation I talked about back in, January and February and March, and now April. Next chart is silver. Nice bullish engulfing this week on Wednesday. Curious, we had so many bullish engulfings on Wednesday. Indexes and metals and energies. Well, energies wasn't Wednesday, but this week. So silver's coming up great. Rally, strong, minor new high since the reversal. Buy signal. As I said before, I'm sure I'm looking for 32 and a half-ish and very possibly 33 and a half-ish. And I can't rule out a lot higher, but now here we have a problem. The head and shoulder top formation that was working great until this bullish engulfing on Wednesday of this week happened pushed prices into territory that's not supposed to yesterday on the close, which is above the neckline. And this follow through the upside today is causing me to cancel out, like I said I was going to do, the head and shoulder markings, because now it's just violated the rules. So it's not a head and shoulder top. And I'm now looking for a move up to resistance areas and previous highs. So that would be up to at least 32.5, which we're almost there already, and 33.6, and maybe a test of these tops, which is around 35.6. Next, another bullish engulfing today in platinum. These are almost back to back, which is fairly rare. One on Wednesday and one today. So this adds a little zip, pop, bang to things. I'm thinking the platinum, which has already gotten at today's high up to the first resistance level, it's going to get up to, in my opinion, 980-ish. And now I have to think that the this rally could get up to about 1030 to 1050. Next, high-grade copper had a bullish engulfing on Wednesday. And here we have a new high for the move. That's great. First objective being fulfilled, resistance, and it got there and basically stayed there. Didn't drop back down, but it is closing right at the bottom of the resistance, so resistance is stopping it a little bit. But I do think it's going to plow through it very soon and get up to 4.8 and maybe, well, that was wrong, 4.85 or 4.9, and I wouldn't rule out higher. This was a great support area that got damaged slightly, but not on a closing basis. And all of a sudden you get the buy signal. Great. Well, no signals here in soybeans, but ladies and gentlemen, we do have a new high close and a new high since a decent amount of time, February 28th. I'll call it a month and a half. After the market has tested major long-term lows in December of last year, now I've got something to talk about in terms of longer-term bullish scenarios developing. Only a few days after we had the lowest low, unfortunately no buy signal at the bottom. We didn't even get oversold, but we came ever so close. This old bear trend line, which is now a bullish or a bear support line, bearish because the trend is down and support because the line's underneath the current quotes, bounced off of it, just like it did March 4th, when it was originally broken from below, getting above it on January 10th, and a first test occurred on January 16th. So this is actually a week ago, the third test of that line. That's pretty interesting. It doesn't happen that frequently. I like what I see. Good, strong close. Let's see if we got some friends here in the other grain markets. Coming up very nicely in soybean oil. Getting real close to making a new high since when? November. That would be considered an upside breakout of sorts. And we're not even close to overbought. If this could happen next week, and soybean oil may be one of the first grain or derivatives that looks really good on a longer term basis. I'm optimistic that we're going to go higher than 48.50. My neckline is 50.50. My minimum upside objective is 62 on this double shoulder, one shoulder, two shoulders. The head of the formation, inside shoulder, first shoulder on the right, and last shoulder, second shoulder is March. And by itself, it's a little double bottom of sorts. Looking good. I think this thing is going to come up a lot more. This could be a major bullish move here. And I could say the same thing for soybeans if it'll just get through those resistance levels. Now we have a little bit more rally in soybean meal, which, which has not been doing well at all. Just recently, a couple of days ago, like in beans, we had a new low since, wow, October 22. Okay, November 22, big deal. And now we're coming back up to resistance, which is I expected, but can we get through this? If I can get a close above 310, I'll be talking about longer term bullishness like I was doing in the other bean oil meal combinations. I like what I see. Maybe my long term bullish scenario I've been talking about for many months is actually going to start to develop in earnest. We tried a couple times, but failed. Now corn is another very strong up day, oversold for the second day in a row. I told you we might get some follow through, some more follow through. So now I'm looking for, and I should have making these adjustments here. Let's just pull this over. That's good. About like that. And one more. And that's good enough. So testing 496 to 499, call it 500 area, just a little under 500. It looks very likely. If we can close above 516 or so, 17 or so, we should have a breakout of a head and shoulder bottom that's very large. February of 24 is the first shoulder with a bullish engulfing ER buy signal. Bingo. The bottom of the market, which is a head and shoulder bottom by itself, starting in July, then August, and the last part, October, all of that is the head of the larger one-year formation. I got a bullish engulfing on the second shoulder of the small head and shoulder that started a very big rally. So that's almost the bottom of the market. Not quite. Then I got a buy signal a week and a half ago on March 28th on a double bottom, which in itself, the double bottom is the last shoulder of the 1 year formation. This is doing just fine. Again, the major upside breakout that could produce a move or a prediction up to 632. That breakout is going to be at 5, I'll call it 520-ish. So close above 520 should start a move up to 630 plus. Next, wheat. Big rally today, finally getting out of this little rut it was in after being oversold in new low ground since the war began 3 years ago. And I'm liking what I'm seeing. I'm not sure whether this is weather related or not. I don't know. Kind of looks like possibilities, but again, I don't know. A little concerned about climate change, etc. But we're at resistance, but we're not overbought. So I think we can plow through this. If we close above 575, then I'm going to be a lot happier that this market's going to have more upside momentum and more upside follow through and probably get to 621, and we'll see what happens then. There is no particular bullish formation I can come up with here. No real good double bottoms, no head and shoulders yet. You do have a low and a lower low. Now all we have to do is come up to a certain level, around 575, and then down one more time. But that'll take a few weeks or month and a half, maybe. Cattle. Bullish engulfing on April 9th. Not carrying through yet, but this is a higher close today. After yesterday, we came back down around the middle of the range of the bullish engulfing on Wednesday. So I'm optimistic that we're going to start closing real soon at 200 and higher. And then there's a gap to close up at 203.60. And then, since we have higher lows and higher lows and higher lows and higher lows and higher lows, since the beginning of, well, since December of 23, a year and a half almost, this is a long-term bull market that does not look like it wants to stop. I wouldn't be surprised to see new highs for the trend in a few months, maybe less than a couple of months. And Miss Piggy dropped off a little bit with a small down gap today. That looks suspiciously small. I hope that's not bad data or something. We'll find out on Monday. But minor downside gap, a minor gap to close a couple of days ago, early this week. Looks like it's going to start to slip a little bit more. I still can't come to any good conclusion here, so if I don't know what to say, kind of shut the heck up. Shell is the stock, along with Apple, that I'm following at the moment. Bullish engulfing on April 9th. Highest close since then, but we do want to close above 64.50 in order to confirm that the bullish engulfing has some follow through. Not yet. So I hope it's going to happen very quickly, Monday, Tuesday, Wednesday. I'm expecting it. Then we've got a couple of gaps way up here to consider closing, 71.90-ish, and the gap just below that all last week or so at 69.60. Those will be resistance levels. We'll see what happens when we get up there. And Apple, oversold, closing strong today. Support area been tested. I like what I see. I'm looking for a gap closure up to 216 at a minimum, and would not be surprised to see something a bit higher than that easily. The gap is really closed at 221.10 anyway. So if it starts closing above 225, that could, without being overbought, that could throw this into a very strong situation. And we're back to the E-mini. The market is closed. Forgive me for being so late today. You guys have a great weekend and profitable trading to you.